Hi, Shay Russell here, editor at the Daily Reckoning Australia. Now, there's two big events happening this week that will have an impact on the stock market for investors. Now, the first one of those is the Reserve Bank of Australia is meeting tomorrow for their March monetary policy meeting. And the second one of those will be the release of December 2018 gross domestic product data on Wednesday. First of all, let's take a look at the RBA meeting. As you know, I've been long forecasting that the RBA their next rate movement will be to cut interest rates. Now, I just want to make it clear, I don't think there will be any rate change at the March monetary meeting, so tomorrow. I do believe that we will start to see the RBA cutting rates from about May onwards this year. However, I think tomorrow they will just stay still on rates. So pretty much same there. What will be interesting from this policy meeting, though, is the RBA's view on growth domestic product data. Now, for the past year, they spent most of 2018 talking about how they believe there'd be a long-term average of 3.5% GDP growth for the next couple of years. The problem is that Australia's GDP growth sort of ran below 3% for pretty much all of 2018. So where the RBA were getting these forecasts from, it sort of makes their number look a little bit like a fairy tale. So I will be, given that the actual GDP data is coming out on Wednesday, I am going to be paying close attention to what they believe or what their forecast for the rest of the year. I'm also, just to put it out there, not going to actually believe that the number they put out there is possible. However, come Wednesday, I am very keen to see what the final GDP figure was for the December 2018 quarter. Here's why. Australian economic data is actually quite miserable at the moment. Towards the end of last year, we saw new housing starts fall, new mortgage applications in number and amount fall, construction starts are down, consumption is dropping, wages are stagnant, they're stuck at 2.3% growth, and savings continue to fall. Now, these are all things that mean that our GDP is likely to reduce for the December 2018 year. The problem is just how much of a shock this is going to have on the Australian stock market. I believe that we could probably expect to see something around the 0.05% range. Now, that would mean that economic growth is flat. And even then, that might take a bit of the wind out of stocks. However, what would be worse and what would catch the market off guard is that if economic growth was well below that or even negative. And even though I expect growth will be flat for the December quarter, I think investors should be prepared for the worst outcome, and that is that December 2018 GDP growth is actually significantly worse than we're all estimating. That's all from me this week. I'll be back later in the week with more.